Hi, my Bitcoin followers! Is Joe Biden about to crash cryptocurrency? Well, we all know Bitcoin and the wider cryptocurrency market have fallen in value amid reports President Joe Biden is set to increase capital gains tax on the wealthy to fund social care and provide universal education to pre-kindergarten children. Well, in today's video, we're going to see, is Joe Biden really about to crash cryptocurrency? Without further ado, let's begin. On Thursday evening, Reuters reported Biden is set to roll out the largest ever tax increase in investment gains, also known as capital gains tax. The federal revenue raised from the increase will reportedly go to fund roughly $1 trillion in child care, universal pre-kindergarten education, and paid leave for workers. Capital gains tax applies to any profit made from an investment when the asset, such as a cryptocurrency or stock, is sold. There are two types of capital gains tax in the U.S. Short-term capital gains tax applies to profits made from the sale of an asset held for less than a year. In this case, the profits are taxed as ordinary income at the same rate as an individual's regular earnings. Long-term capital gains tax is applied to profits made after the sale of an asset held for over a year. It is currently applied in rates of 0%, 15%, or 20%, depending on the gains. The upper limit of 20% is applied to profits over $441,450. Biden is reportedly planning to almost double this upper limit to 39.6% for people earning more than $1 million. Social media lit up with posts from the cryptocurrency community on the news. One wrote, "Market turned to full-blown scam. Thank you, Biden." Cryptocurrencies are infamous for wild price swings and volatility due to market speculation. Despite this, 2021 has seen a number of established platforms, such as PayPal and Visa, take steps towards wider adoption of cryptocurrency as a payment method. The crypto market was not alone in seeing prices tumble on news of Biden's tax plan. On Thursday afternoon, the Dow Jones Industrial Average turned sharply lower, down by 0.94%. Joe Biden's tax-raising plan for wealthy investors helped to blow up cryptocurrency valuation today as Bitcoin skidded to 25% below last week's record high. Biden's maiden speech to a joint session of Congress on Wednesday is expected to include a move to nearly double taxes on capital gains to 39.6% for the earnings over $1 million. Wall Street showed its displeasure last night with the S&P 500 down 0.9%. While fears for future investment in digital assets sent Bitcoin down as much as 10% to $48,610. It had been near $65,000 following last week's NASDAQ IOP of currency exchange Coinbase. Whereas the froth has come off cryptocurrencies, equity market investors appear more skeptical about the chances of Biden getting the tax changes through Congress. If you are enjoying the video, then make sure to hit the like button and subscribe to the channel for more interesting videos about Bitcoin. UBS's Global Wealth Management team thinks the rate closer to 28% is a more likely outcome, adding that stock market history shows very little relationship between capital gains tax changes and the performance of shares. They added, some investors may choose to harvest capital gains now, rather than potentially pay a higher rate in the future. However, U.S. taxable domestic investors own only about 25% of the U.S. stock market. London investors took last night Wall Street's sell-off in their stride as the FTSE 100 index fell by just 10.20 points to 6,929.4. A bigger focus appears to be next week's Q1 reporting season, particularly as most of the UK banking sector is due to post figures. The favored domestic picks of UBS analyst Jason Napier are Barclays and Virgin Money after he increased his price targets on the pair by 8% to 195p and 5% to 210p respectively. The Biden administration is looking to crack down on tax evasion and pointing to cryptocurrency as a big area of concern. The U.S. Treasury last week announced proposed changes to the cryptocurrency reporting as part of President Joe Biden's proposed American Families Plan. The plan would implement a new rule for businesses and crypto exchanges, requiring them to report any cryptocurrency transactions with a fair market value of $10,000 or more to the IRS. That's the same amount currently required for cash deposits. If you deposit more than $10,000 into your checking account, for example, your bank is required to report that to the federal government. The report says cryptocurrency poses a significant detection problem by facilitating illegal activities, broadly including tax evasion. The Treasury's proposal is a small step towards the type of governmental regulation that could help clarify questions about investment value and potential uses of cryptocurrency in our broader economy. Better regulation will benefit crypto investors, further the development of new technologies, curtail the use of crypto assets used for illicit payments, and reduce the risk of cyber attacks, which can result in collateral damages elsewhere in our financial system, according to a 2019 report on crypto regulations from Brookings Economic Studies. The latest move towards regulation from the Treasury is unlikely to be the last, according to some experts. I expect more enforcement action despite what happens in this specific proposal, says Andrew Gordon, CPA, a tax attorney and president of Gordon Law Group. Whether or not this specific proposal passes, it underscores the importance for anyone with holdings in digital currencies to keep accurate, up-to-date records of any crypto transactions or transfers. Today, the IRS taxes crypto as property, meaning your sales and trades are subject to taxes on the capital gains or losses incurred. Now more than ever, we're seeing an uptick in IRS enforcement. So it's good to have records and understand where everything came from. If you own cryptocurrency, keeping track of the following throughout the year will make it easier to report your cryptocurrency at tax time and understand how other potential regulatory actions might affect you. The IRS first issued guidance around crypto reporting in 2014. Its guidance doesn't cover all topics related to crypto reporting, especially for activity that goes beyond simply buying and selling digital currencies. But there's reason to believe regulatory powers have a growing interest in crypto for individual investors and businesses. Despite constituting a relatively small portion of business income today, cryptocurrency transactions are likely to rise in importance in the next decade, the Treasury report notes. U.S. Treasury Secretary Janet Yellen recently said there's not yet an adequate framework for tackling cryptocurrency regulations in the United States, though she believes it's a topic worth addressing, in response to a question about regulating crypto in the Wall Street Journal's CEO Council Summit. As recently as 2020, the IRS added a cryptocurrency question on Form 1040 for taxpayers to report capital gains and losses on crypto transactions. That addition alone speaks to how important an issue this is for the government, Gordon says. I think we're just going to continue to see more enforcement, but hopefully along the way, some more clarity as well. So guys, let me know down in the comments section below. Do you also think Joe Biden is about to crash cryptocurrency? For more interesting content, give this video a thumbs up, and don't forget to subscribe to the channel for more awesome and interesting videos related to Bitcoin. Have a nice day, and I will see you in the next video.